Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep up with the analysis of the euro currency. So the setup that we discussed in the weekly report in the weekend works nice. So actually the entry point was perfect and actually market has hit already its nearest target. And from that standpoint, not many things to do, because if you do not have any longs, currently it's not best place for taking the position, because market stands at the resistance, as you can see, around 1.10 area. So if we suggest that euro will keep the upside pace, which is actually probable, is because central bank decision in Europe will be only on Thursday. Everybody expects a rising of the rate. Additionally, market right now watching for pause in a Fed Reserve action. So that's why on this background, maybe it might be some positive within the few sessions, since market could try to reach more extended targets. But at the same time, bears also should keep an eye on the overall background, just because strong CPI today, for example, could make impact on the situation. And from that standpoint, if you take a look on the 4-hour time frame chart, that's our ABCD and the nearest standing OP target, nearest butterfly target, 1.10. This market's coming to it. Here, unfortunately, we do not have another butterfly, just because take a look at this spike is a bit greater than this top. And formally, this is not the butterfly pattern, although the shape, as you can see, very similar. So from the OP, we could count on some pullback, some retracement. And for the bears, it might be important. I'm not sure that definitely it makes sense to take the short position immediately right at this level, because, well, with all the stuff that I have just talked about concerning some bullish sentiment, here you could not get the significant pullback. So if you would like to take the short position from this level, it would be better to wait for something bigger, some larger reversal pattern. That might happen only if something will go wrong with all three components that we discussed: inflation release, European Central Bank decision, and the Fed. Maybe this will be different, not in terms of the decisions, but in terms of the comments. So the Fed could be more hawkish in comments, the European Central Bank might be a bit dovish on comments. So that could make impact on the sentiment. And from that standpoint of view, keep an eye on the possible bearish reversal pattern here. Taking the position right there, well, maybe this will be some pullback, but it will be a bit difficult to combine the stop loss order, get the corresponding reward. So it's maybe only in some very small time frames. I mean, 5-minute chart, maybe it might be something interesting. So that's our next targets that we have. 108.50, as we said, this is 1618 extension, and simultaneously, if we treat it as a double repo, that should be the minimum target of the double repo. And overall background, at least theoretical, as it's suggested by market society, it mostly stands friendly to possible continuation. Ultimate target, the XOP with this ABCD pattern, it's around 109, sorry. So that being said, on the hourly chart, you could see how our action starts really perfect once the XOP has been completed, this ABCD action. And for the pullback, we will keep an eye on the two levels. It's 107.60, 107.35, 107.40, these two levels. As we could be touched on the retracement out from the 108.10 area. For the bears, here's I show you what I mean with the possible real reversal. So for example, you could suggest this might be the hand shoulder. So if market will form here shoulder, head, this will drop, collapse right back down to the lows, and will not be able to continue our protection, start forming the right arm. That's at least something that bears could use. It doesn't mean that this will be definite major reversal to the downside, but at least it provides you more or less acceptable target, some kind of the ABCD on the hourly chart. That's at least you could trade on this time frame. Right now, taking position here, well, it's not really big potential, at least in the background that we have currently. So that being said, for long entry, watch for retracement. It should not be something of this sort or that one. It should be gradual, not very fast. Perfect if it will be in the shape of some ABCD pattern. So these two levels, preferably of course higher standing level for retracement. This market now should show reaction and resistance. That's for the bulls. For the bears, as I said, not many things to do. The only decision is to wait for some large bearish reversal pattern, but hardly it will happen today.